In this video, I'm going to be sharing with you a super simple trading strategy that made over 2000% in the last 5 years. This strategy is so simple and easy to understand that it will solve 90% of your trading problems. And just to let you know, I have fully automated this trading strategy into a trading algorithm, and I will be giving you free direct access to the algorithm if you stay to the end of this video. Now let's dive right into it. By the end of today's video, you'll know a complete breakout strategy that is fully mechanical. You'll also know when price is likely to start breaking out, because I'll be sharing with you a very important characteristic to look out for on the daily time frame. You'll also have full confidence in the strategy because I'll be sharing with you the full backtest report of the strategy over the last 5 years shortly. This is a repeatable and proven strategy that occurs about 2 times every week, which means that you have free time to do other things such as spending time with your family or exploring other strategies. Once again, with this strategy, there will be no more discretion and confusion because you have clear and mechanical rules. These rules are so clear and mechanical that I have fully automated the strategy. So now let's take a look at the full backtest report of this strategy. Over the last 5 years, you can see that the strategy made close to 2,500%. It took about 441 trades. It has a high profit factor of 1.77 and a low drawdown of only 23%. Over here, you can see that the returns are quite spread out over the 5 years. The only issue is 2023 had a rather low return, but that is normal after looking at 2021 and 2022 results. And this is the equity curve of the strategy playing out. So you can see that overall the strategy has quite a smooth upward trend other than this stagnation period. So this is the equity chart of the strategy over the last 5 years. You can see that the strategy is quite a smooth uptrend other than this stagnation period in 2023. So this is FX Dreamer, and I've turned this strategy into a trading algorithm that helps me take trades without me having to do anything. If you want access to this trading algorithm, just click the link in the description below. Now let's move on to the rules of the strategy. Now we are on TradingView, and I'm going to be explaining to you the rules of the strategy. So what you need to know about this strategy is that we are only looking at 2 time frames. We are looking at the daily time frame and the hourly time frame. And here's what we are looking for on the daily time frame. We are looking for something called an imbalance candle. What an imbalance candle is a candle with its body less than 50% of the entire candle's range. For example, for this particular candle, the body is about 27.9 pips and the candle's range is about 91.8 pips. So 27.9 divided by 91.8 is definitely below 50%. So that is step 1 checked. We got an imbalance candle on the daily time frame. Now we move on to the hourly time frame, and here's what we are looking for. On the hourly time frame, we are waiting for the Asian session to end, which is at about 7 AM UTC plus 2. Once it is 7 AM UTC plus 2, we look back 6 candles and we mark out the range. The range meaning the high and the low of the session. So in this case, this is the range of the Asian session. And what we do next is we place a buy stop order at the high of the range with our stop loss around 80% of the range. Next, we just wait for price to tag us in. For this particular strategy, we have a 1 to 5 risk to reward, which is also why the win rate, as you saw in the backtest report, is only close to 30%. So that is one trade example. Let's move on to the next. Okay, so this is the next trading example. Now we are on the daily time frame, and the first step is to look for an imbalance candle. You can see that this candle's range is 152 pips and its body is about 62 pips. So this is an imbalance candle because 62 divided by 152 is less than 50%. Now that we know that this candle is an imbalance candle, we go to the hourly chart. And on the hourly chart, we are waiting for the Asian session to close at 7 AM UTC plus 2. So over here, this is 7 AM and we look back 6 candles to find the range. And for this particular example, the range is just this one candle. So we place our buy stop order there and our stop loss around 80% of the range. So we place our buy stop order at range high and our stop loss around 80% of the range. And we wait for price to tag us in. Let's see what happens. So we got tagged in here. And price basically just went around, I think this was about 3 to 4 hours. He went back to break even and eventually it hit our take profit. So for this particular trade, it happened in October and only closed around the end of November. Yep, so the trade closed towards on 20th November, so it took about 20 days to bank this 5R. So that's 2 trading examples. Let's move on to the last trade example. Now we are back on the daily time frame for the last trade example. So the first thing we look for on the daily time frame is if we have an imbalance candle. For this particular candle, the range is about 70 pips and the body is about 18.5 pips. So this is definitely an imbalance candle. That's step 1 done. Now let's look at the hourly chart. And if you've been paying attention in this video, you know that on the hourly chart, we're waiting for 7 AM UTC plus 2. Why is that? That's because we are waiting for the Asia session to close. Once the Asia session closes, we place our buy stop at the high and our stop loss at 80% of the range. Then we wait for price to tag us in. For this particular trade example, we went all the way up to about close to 3 hours, but price came back down to tag us for a loss. I just wanted to show you this example because, like I said, this strategy only has a 30% win rate. So this is a very normal result. Okay guys, so that's it for this video. Let me just recap the rules that we are looking for this strategy. Firstly, we want to look for an imbalance candle on the daily time frame. And an imbalance candle is a candle with its body less than 50% of its range. Once we have an imbalance candle on the daily time frame, we go to the hourly chart and we wait for 7 AM UTC plus 2 and we look back 6 candles and we find the range of that 6 candles. Once we have that range, we wait for 9 AM UTC plus 2, we place a buy stop order at the high of the range and we wait for price to tag us in. We have a stop loss of 80% of the range and a target of 5 hours. Once again, I have automated this strategy because it's so mechanical that a robot can do it. If you want access to this trading algorithm that I've built so that you don't have to manually execute the trades, just click the link in the description and you get full access to it. See you guys in the next video.